Ever feel like your money should be doing more for you? You know, you're saving it, but it's not really growing? Well, in the next few minutes, we're going to break down the essentials of investing so you can start building some real long-term wealth.
Our goal here is pretty simple. We're going to demystify stocks, mutual funds, and this really powerful strategy called an SIP. Honestly, these are the basic tools that can help turn your income into actual wealth.
So, let's kick things off with the absolute foundation of the market, a stock. What in the world is it anyway?
Just think of it like this. When you buy a stock, you're buying a teeny tiny piece of that company. You literally become a part owner, a shareholder. Now, companies offer these shares to the public for the first time through something called an IPO, that's an initial public offering, and they do it to raise money for big things, like growing the business.
Right. That's the big question, isn't it? If you own a piece of a company, why doesn't its value just, stay put?
Well, a stock's price is always telling a story, and it's a story shaped by two big forces: how the company is actually doing and how much people want to own it. If a company is crushing it, more people want in. It's kind of like a limited edition sneaker. When demand is high, the price shoots up. But if there's bad news and everyone rushes to sell, well, the price drops. It's a constant dance between what the company is worth and what people think it's worth.
And you know what? Getting started is way easier than you might think. You'll need a special trading and demat account, which is just a digital wallet that holds your shares. Once you've got that set up with a registered broker, it's a lot like online shopping. You just browse for the company, decide how many shares you want, and place your order. Simple as that.
Okay, so we know what a stock is and how to buy one. Now let's zoom out a little and look at the actual marketplace where all this buying and selling happens.
Here in India, the action happens on two main stock exchanges: the NSE, that's the National Stock Exchange, and the BSE, the Bombay Stock Exchange. You can think of them as these giant official marketplaces. They provide the technology and, more importantly, the rule book to make sure all the trading is fair and out in the open.
This is probably one of the first questions everyone asks, and it's a really important one. With so much money flying around, who's making sure it's not just the Wild West?
The answer is SEBI, the Securities and Exchange Board of India. Think of SEBI as the market's referee. Their entire job is to protect investors, just like you. They set really strict rules, they're always watching for funny business, and they make sure companies are being honest. All of that gives you the confidence you need to invest.
All right, so picking your own stocks can be really powerful. But let's be honest, it takes time and a lot of research. What if there was a way to invest in lots of companies all at once without having to be an expert? Well, that's exactly where mutual funds come in.
A mutual fund is just a brilliant idea. It's basically a big pot of money that thousands of people, all pooling their money together, contribute to. Then a professional fund manager takes that giant pot of cash and invests it for everyone. This way, you get instant diversification and expert management without lifting a finger. Now, these funds usually invest in two main things: stocks, which we've talked about, and bonds. And a bond is actually super simple. Think of it as a loan. You're just lending money to a company or the government, and in return, they promise to pay you regular interest and give you your original money back at the end. Because of that, they're generally safer than stocks.
And that brings us to the three main flavors of funds. You've got equity funds, which go all in on stocks for high growth. Then there are debt funds, which focus on safety and steady income by investing in bonds. And, you guessed it, hybrid funds give you a balanced mix of both.
So you've decided a mutual fund is the way to go. Awesome. But what's the best way to actually invest in them? Well, this brings us to a strategy that is so simple but incredibly powerful.
It's called an SIP, or a systematic investment plan. All it means is that you invest a fixed amount of money automatically, usually every single month. It's not about trying to be a genius and time the market. It's about building a consistent, disciplined habit of investing month after month.
And this is where the magic really starts to happen. Let's take a look at what that simple, consistent habit can actually do for your money over time.
This is the power of compounding, right here in black and white. Just look at these numbers. If you invest just 5,000 rupees a month, after 5 years, you've put in 3 lakh, and it could be worth around 4 lakh. That's pretty good. But watch this. Over 10 years, you've invested a total of 6 lakh, but your wealth could grow to nearly double that, almost 11.6 lakh. That's not just your money working, that's your money's earnings making their own money.
And this chart just says it all. That first bar is the money you put in from your pocket. The second, much taller bar is what it becomes. Over 10 years, the growth alone is almost as much as your entire investment. That's the incredible power of just staying consistent and giving your money time to grow.
So, after all of this, what's the one key thing to take away? It's actually really simple.
Time. Time is your single greatest asset when you're investing. The longer your money is in the game, the more the compounding magic can happen. Seriously, even a small amount you invest early on can grow into a much larger sum than a big amount you invest later in life.
And by watching this, you've already taken the most important step of all. You've gained the knowledge. You now have a solid understanding of stocks, mutual funds, and SIPs, and that's everything you need to begin your journey.
So the only question left is, what are you going to do with this knowledge? The journey to financial freedom doesn't start with some giant leap. It starts with a single, consistent step. So what's yours going to be? Start today, stay consistent, and get ready to watch your own wings of wealth take flight.